Well, hello and welcome to this independent agent overview. My name is David Rutz. I'm the founder of David Allen Capital. I'm very excited to share with you this opportunity we have. We're helping a lot of business owners. They need our service, and it's created a significant income opportunity for people like yourselves. This short overview will give you enough information to decide whether you want to take the next steps with us or if we're simply not for you. David Allen Capital is a company that started in 2015 by myself. We're Michigan based. It was created for two reasons. Number one, because there's a need out there for business owners to gain access to simple and fast business loans. We want to help them. Secondly, it was to provide a great opportunity for people like yourselves who want either a career change or supplemental income. So we want them to be able to earn a full-time income helping business owners out. Now, what we are basically is an independent sales organization representing all the top lenders and advance companies in the small business space. And what we do, though, is we represent clients rather than those lenders. We have agreements with all those lenders, but we represent clients to bring the best deal forward for them. So one application goes to all of our lenders. Our lenders then compete to provide the best deal for our clients. What they do is they give us quick turnaround so that literally in one day we'll have an answer on whether that client's approved and for how much they are approved for. Our business has been growing very fast over the last year. We're one of the fastest growing independent loan agents in North America. And just this year in 2016, we were acquired by a company called Longevity International, which is a direct sales company out of San Diego, California. International company, publicly traded under the symbol YGYI. You'll learn more of the benefits of that later, but basically it strengthened our company. It helps us to expand quicker, faster, and better, which makes it a better opportunity and a stronger opportunity for you. Now, our industry, small business lending, exists because small business owners need capital. Entrepreneurs have ideas. Existing businesses have ways to grow for expansion, growth, marketing, etc. But they need money to do so, and they don't always have money. And they can't get access to money like that from typical or traditional lenders. Or maybe they're in a financial pinch, or they're a seasonal company and they're trying to get through a seasonal slowdown. Again, traditional lenders don't exist anymore. They're not lending to small businesses under $250,000. In fact, under $500,000, really, you can't get a loan as a business owner anymore. It was always difficult, but now, because of regulations and delays, it's almost impossible for a small business owner to get a loan of that size. And if they can, they've got a 3 or 4 month application process, very difficult, very arduous, and they usually have to sign over their entire company to get that loan. Well, what that's done is created a whole new industry that we're involved in called alternative soft money lending sources. Basically, there's lenders out there that they don't have savings and checking accounts like big banks. They don't have mutual funds that they're selling or CDs or mortgages. They do one thing: small business loans. And their goal is to help small business owners get access to capital to grow their business or get through pinches. And they're very, very good at it. These loans are simple and fast, approved in 1 day, funded in 3 to 5, and the application is literally a simple one-page application. See, our lenders want to lend to business owners. They're not looking to take ownership of a company. They're looking to help business owners out who are existing business owners producing existing cash flow. And they value your cash flow more than your credit score if you're a business owner. So if you've got a business, let's say you're a restaurant producing revenue every month, that matters more than what your personal credit score is. They get this. They're business owners themselves. They want to lend to business owners. They know a lot of business owners have compromised credit from owning that business. So they come in and provide that business with money, simple and fast. These are all short-term loans, 3 months to 24 months generally, and they're usually between $10,000 and $500,000 is the loan amount. Now, how do you get that loan? Typically, what you're doing in monthly sales, you can get approved for. So if you're doing $20,000 per month in sales, you can generally get a quick $20,000 loan. Our requirements are you must be doing $10,000 a month in business, in revenue that is, and you must be in business at least 3 months. Okay, so no startups, but heck, you can be a pretty new business and get a loan with us. Now, a couple other things. The application process, business owners don't want a long-term process that a big traditional bank puts them through. We've got a one-page application, minimal documentations. We're talking about checking account statements, last year's taxes, business taxes, an avoided check and driver's license. Very simple. These loans are all fixed interest loans with fixed payments, showing your total cost of capital. TCC is what we lead with rather than confusing rates. People don't understand rates. They don't understand if it's a compound rate, a simple rate, annual rate, rate over the course of the loan, what's an APR, what's not an APR. We come in real simple and say, here's your total cost of capital. You borrow $100,000, you're going to pay back $124, let's say. You're paying back $124. That's what you're going to pay back. And then here's your payment. That's how we do it. It's a lot easier for them to understand. There's no collateral required of the business. There's no board of directors that the bank needs to be added to. There's no venture capitalist who says we need to approve every decision you make. None of that. The owner just signs a personal guarantee to the loan, which is standard. I mean, if they've got a car in the company's name, they had to personally guarantee it. That's standard. Okay, these are business loans. The business does get tax write-off. So let me give you an example of total cost of capital. Generally, it's 1.2 to 1.3 times the loan amount. So if they borrow $10,000, generally they're going to pay back $12,000 to $13,000. Again, real simple to understand. If they're a higher risk, maybe a higher risk industry, or maybe they've had some bounce checks or have some real bad personal credit, then they'd be at a higher risk. Maybe they'd pay 1.3 to 1.4 times what they borrow, or even as high as 1.4 to 1.5 times. Now, let me go over this total cost of capital real quick, because total cost of capital is usually far lower than the total benefit of the capital. What do I mean? Let's say you're a restaurant and you're doing $50,000 a month in sales, and you want to borrow $50,000 because you want to remodel the place and you want to expand. And by remodeling and expanding and updating, you think you'll generate an extra $15,000 a month in sales and go from $50,000 to $65,000. Well, if you borrow $50,000 from us, the total cost of capital, you might have to pay back $65,000, let's say, or even say $70,000. Let's go, you're a 1.4, you're a real high risk, and you got to pay back $70,000 when you borrow that $50,000. So your total cost of capital is $70,000. But you're going to bring in an extra $170,000 a year in sales. Now you start saying to yourself, my total cost of capital might be $20,000 in interest here, right? Because I got 50, I'm paying back 70, so it's costing me 20,000 in interest, but I'm generating over 100,000 in extra sales and profit. So what difference does it make what it costs me? I can't expand and remodel without this $50,000 loan. So the total cost of capital is far lower than the total benefit of that capital, so I'm going to take the loan. Or maybe a company's about to go out of business. They haven't paid their rent in 4 months, and the landlord is going to close their store down. And they realize if they don't pay $25,000 in rent that's due, they're going to lose their store. And all of a sudden, we can get them a $25,000 loan where maybe they have to pay back $32,000, but over the course of a year. But for them, they're like, hey, I get to stay in business. My total cost of capital might be $7,000 in interest, but my total benefit of that capital is I stay in business. So that's the type things that we can help, and all the interest is tax deductible. Most businesses out there love our loans. They love our model. They love it simple and fast, and they proceed with us. All right, there are origination fees on our loans. Generally, it's 0 to 2.5%. It's deducted from the loan amount that's given to them, so they never have to write a check to us up front. There's no application fee that you have to collect, none of that. There's no fees you collect. You don't even collect this origination fee. It's deducted from the loan that's given to them. If they're a super high risk, we've seen this as high as 10%. It's super rare, but for full transparency, I want to show you this. It's generally 0 to 2.5% of the loan amount. Okay, a couple more things. Repayment terms, generally 6 to 15 months, but could be anywhere from 3 to 24 months. These monthly payments, let's say you figure out you have to pay $6,000 a month. a client's going to pay. Rather than paying $6,000 a month, these lenders have learned how to get the default rate down and approve more loans. The way they do it is they take daily micro payments out rather than a big monthly payment. So as an example, if you had to pay $6,000 a month, well, there's 20 banking days in a month. So they would take $300 out per day. At the end of that month, they would have taken out $6,000. Your monthly payment's been made. You didn't really miss it because you're only paying $300 a day. And maybe you're doing $5 or $7 or $8 or $1,000 a day in sales. So you have more money coming in than's going out. You wouldn't have been able to get approved for a $6,000 monthly payment if you weren't doing at least $70,000 or $80,000 a month in sales. Okay, so it gives you an example. Micropayments, our clients love it. Decision again in one day, funding in under 5. And check this out. Once the loan's been paid off at least halfway, they can get a renewal. And means you get another commission and that client gets another batch of money. Real quick example, company borrows $50,000. Let's say they have a repayment of $63,000 over 9 months. That would be a pricing factor of 1.2 times the loan amount. So the total cost of capital would be $63,000. They're borrowing $50,000 and they have to repay $63,000. Real simple. Well, 9 months to pay back that $63,000, what that would be is a daily payment of $350, which is that $63,000 divided by 180 daily payments. Again, there's 20 daily payments per month whenever the bank's open. They wouldn't even miss. They're doing $50,000 a month in sales. Generally, they're not even going to miss $350 a day coming out of their bank. Again, that $13,000 would be tax deductible. So why do our loans make sense? Well, number one, we serve bankable and unbankable clients. What does that mean? People who can get a loan at the big institution and people who can't. The ones who can't obviously love us because we get them a loan where they otherwise can't get approved. But even those who are bankable, they don't like the delays it takes or the scrutiny or the regulations that the big banks put on them. So they even prefer to get loans from us. Plus, they cost about the same. If you look at a bank from a big institution who may charge 7 or 8%, but they want you to hold it for 7 or 8 or 9 years. And all of a sudden you look at your total capital cost, you're at 2.1 to 2.2 times what you borrowed. So you borrow $50,000, you end up paying back $110,000 over 8 or 9 years. You end up paying a lot more total cost of capital. These are short-term loans with us. We get them quick, time-sensitive opportunities. We help them get a loan today, approved today, funding within a week. If they need to get through a current pinch, we've got them covered. Or if they're entrepreneurial and they're a strong business owner, they've got other ideas that they could pursue and they need money for it. Whether it's inventory discounts or expansion to increase revenue or marketing and advertising to increase sales, which increase profit, or they need to hire staff to facilitate growth. Maybe they got to pay a tax bill that's due or, again, another pinch. So these are many reasons. I mean, we've got so many stories from cardboard companies that want to buy cardboard in bulk because they end up saving a lot, and they end up saving a lot more than the total cost of capital is from us to get it. Or landscape companies that have more work than they have equipment to do, so they need to buy more mowers and buy more trucks. And they get a loan from us to fund their products so they can take in all that extra revenue. The ideas are endless. Imagine for a moment if you owned a business and you could get a loan simple and fast, approved in one day, funded within a week. You didn't have to have good credit. You could have a 500 personal credit score. And you can get money this week to help grow your business. What ideas would you have? Or if you're ever in a tight financial pinch and you have to make a decision, pay payroll or pay rent, or you're in trouble, wouldn't it be nice to have access to money quickly to take care of both? Absolutely. That's why our loans make so much sense. Now, when you're going out to get customers, check this out. There's 2 ways you can go out and attract clients. One is called bird dogging and one is hand holding. It's pretty simple to understand what this means, but bird dog, you're acting more like an affiliate. You're introducing people to our loans and referring them to our website. They enter your ID number and name, and you get credit for that loan, and you're in a significant commission. Or hand-holding is when you act more as a loan agent and you help answer more of their questions. You select their application and submit it to us. You pre-qualify them to determine whether they're qualified for even applying. And it's a real simple process. So when you're first getting started, you may want a bird dog because you're learning the process. But as you grow with us, you may want to start hand-holding because you get a lot more referrals and leads when you do that. When you're helping business owners out, they end up referring you to more people. So either one is fine. You're paid the same. All right. And when you're going out to do this, this is how you know whether you fit. Number one, are you willing to help business owners you know? Because most of them need money or have ideas they'd pursue if they found out they could get access to money. So are you willing to help them? If not, we're probably not for you. Number two, are you willing to canvas as a customer? That means when you're out eating out or you're picking up your dry cleaning, are you willing to say, hey, this owner might be able to benefit from a small business loan and introduce them to the opportunity of getting simple and fast cash? You're not selling anything. We're a solution to these companies. We're not selling anything. It's like a real estate person. They don't convince you to sell your home. They just let you know if you ever want to sell a home, they'll help sell it better than anyone else. And then if the time comes that you want to sell a home, you contact them. But they're not selling you on selling your home. They're selling you on the service they'll provide if you decide to sell a home. We do the same thing. We just let them know we can get them access to simple and fast cash. And if they want to check it out, then we refer them to the website. And then finally, number three is cold canvassing or networking with people. We don't ever tell you to do this. If you do number 1 and 2, which is helping business owners you know and canvassing as a customer, you'll have plenty of clients. And when you see what you make per client, you'll see you don't need hundreds of clients to make a significant income. All right, here's an example of what we say when you're going out to talk to someone, whether it's someone you know or you're canvassing as a customer. You would obviously, if it's someone you know, you just, inform them as a business owner, your doctor, your attorney, your dentist, your dry cleaner, restaurants where you go to, friends of yours who own landscape companies, et cetera, et cetera. You just inform them that you're now a loan agent and you can help get them access to capital if they ever have an opportunity or if they're ever in a tight pinch, right? But let me go through this real quick. Let's say you're talking to that restaurant owner who owns that sushi restaurant. You ask to introduce themselves. You ask to talk to the owner and you say, hey, I just want to introduce myself. I'm a small business loan agent. I wanted to introduce myself because we represent lenders who actually like to lend to business owners. We've got a simple and fast process where you can literally get approved in a day and funded under a week. And I just want you to know these lenders, they understand business and they value your cash flow more than your credit score. So I just want to give you my business card. If ever you decide to expand this restaurant or if you're ever in a tight pinch, I want you to know we can help you. We can get you quick access to money and a quick decision. I just want you to know I exist. I love your restaurant here. If I can ever help you, let me know. Here's my card. That's it. That's what we do. We just get in the consciousness of people that we offer these loans. All right. And when you do that, some of them are going to take the next steps. Sure, they're going to ask questions and you need to go through training. But this is very basic. You don't need to have a finance background. All right. It's really, really simple. Now let's talk about how you get paid. As I talk about this compensation, I want you to know one thing very clearly. We love the lenders we represent. We love what they're doing to the small business space and helping those business owners out. We love that they pay us so well on those loans. But this is a complete results-based compensation plan, which means only funded loans create income, not your efforts. You can put all kinds of efforts in. If you don't help someone get a loan, you don't earn a commission. All right, so there's no guarantee of income at all. You could actually earn zero. Just like if you start working for Century 21. If you don't ever sell a home, you're not going to make a penny. It doesn't matter how often you try to sell a home. If you don't list a home and sell a home, you don't make a dime. Results-based compensation. However, there's no income ceiling either. We're not going to limit you and say you can only help 2 clients a month. You can help 200 clients a month if you want. It's entirely up to you. But I want to read this disclaimer at the bottom. All statements that you're about to hear, because I'm going to show you some examples, are mathematical demonstrations only. No income is earned unless customers are funded loans. Any income scenarios or examples you're about to see in this training and presentation are not typical, should not be expected. Again, they're mathematical demonstrations. Our compensation plan, though, guys, gals, is designed to help you turn a significant income from your personal efforts alone. Personal results alone. Okay, it doesn't matter your college, doesn't matter your gender, doesn't matter your race, doesn't matter your age. None of that matters. If you produce results, you're going to do better than anyone else. And our culture is one of attracting new clients by helping them. That's what we do. We help clients get access to funds. All right. Now, most of the commission we pay out is done so to you through what we call personal commissions or direct pay. Direct pay goes to the agent who helped that client get the loan, the one who brought that client forward to David Allen Capital. However, to help us expand and what's helped to make us one of the fastest growing loan agent companies in North America, why our lenders believe we'll be the largest in 2017, is because we've gone a step further. We've gotten a little creative in this compensation. And what we've said is, much like Real Estate One or Century 21, if you look at their model, you can be an agent there and do very well marketing homes, right? There's people make $250,000 a year selling homes or more, right? But then there's someone called the real estate broker. They own that real estate office in your town that all those agents work out of. Do you know that broker gets paid off every home sold by all those agents in their office? Even though they may not list or sell that home or never sit in an open house or never talk to a client, but they built that office and they brought all those agents forward, and all those agents who are marketing the homes do very well. That broker gets paid to support those agents. And that broker can make extreme amounts of money by helping those agents. Now, we said, let's use the same model, but let's not make you start an office. Let's not make you have to invest money to do that. What if you could, though, build an agent team yourself and benefit from the production of your agent team? Doesn't it make sense? Yes, it does. So we've done that. We allow you to build an agent team of your own. If you create and coach a successful agent team, you're going to get paid on the loans that they help fund. You get paid on that. We call them DAC enroller bonuses. And then our parent company, Longevity, who I said acquired us, they also have additional compensation outside of the David Allen Capital compensation plan you're about to hear about. They pay, it's a far less significant part of this pay, but they also pay additional money, and you can learn about that at another time. But let's go through what you get paid on your personal loans. Number one, you're going to earn on average 2 to 4% of the loan amount that you fund. Example, you help me as your client get a $50,000 loan, you're going to make $1,000 to $2,000. Now, here's the good news. I turned in a one-page application and some bank statements, literally my checking account statements. We get an answer in a day. We're funded in under a week, and you're paid that commission within 2 weeks of that loan being funded, sometimes within 2 or 3 days. But we always say within 2 weeks of that loan funded, you're going to get your commission. So when the loan turnaround time is only about a week, and then you're funded within 2 weeks, you see how quickly you get paid on these? Now, the number of loans you get each month will actually help increase what you earn. Can get you higher to that 4% amount based on the number of loans. So let me show you that real quick. This is the way it works. Again, you're going to average 2 to 4%. Of any loan you get, you're going to earn in commission. But this is where we come up with that. See, for each loan, there's a loan commission value determined. It's 4 to 7% generally of the loan. On average, it's 5%. This is a loan commission value. You don't get all that. You get a portion of that. What that is that's the total amount we're going to pay out across all of our different commissions. The DAC direct pay that you get, also the team commissions. Remember, we pay that person who builds that agent team, which can be you, and then also the longevity commissions. All that comes out to be what that averages about 5% of the loan amount is what we want to pay out. Okay? So, as an example, you help a client get an $80,000 loan. That is going to be on average 5% as loan commission value, which would be about $4,000 loan commission value in total we are going to pay out throughout all of our different commissions. Now, you get a portion of that. How much do you get? You get 50 to 80% of that loan commission value. All right. And what determines is what your production level is. See, when you start out, you're at 50% minimum on all loans. If you close 2 loans the month prior, then you're at 60% this month. So what you do this month bumps you up the ladder for next month's pay. If you close 4 loans this month, next month you're going to be making 70%. If you close 5 this month, you're going to be at 80% next month. See how that works? And over time, as you accumulate 50, 100, 200, you always stay at that rung of the ladder. So you can go up and down this ladder every single month based on your production until you accumulate a certain amount. But when you first start, our first month, we start you at 60%. Your first full month, you're at 60% of the full loan commission value you get. What do we mean by first full month? Real quick. Let's say you start September 15th. Is that a full month? No. So you're going to get 60% all of September and all of October because that's your first full month. Now, November, you're going to earn based on how well did you do in October. Well, if you close 2 loans in October, you'll still be at 60% in November, right? 4 loans in October, you'd be at 70% in November. 5 loans in October, you'd be at 80%. And if you didn't close any, you'd be at 50%. Right? December, same thing. We look at the month prior. How'd you do? That determines what you earn. So our goal is to get you producing a certain amount of loans every single month, staying consistent so you can stay on the higher rung of the personal commissions. All right? Let me give you an example. $100,000 loan. Average loan commission value is $5,000 because it's 5%, right? That's the average. What does that look like? Again, you get 50 to 80%. That would be $2,500 to $4,000 depending upon where you are on the ladder. You at 50, 60, 70, or 80. Again, during your first full month, you're automatically at 60%. But the difference in your income here isn't the loan size or the LCV, is it? The difference is, are you at 50, 60, 70, or 80%? Would you rather make $2,500 or $4,000 on this loan? Obviously, you'd want to earn more. How do you do that? You maintain the 80% level by having 5 loans a month going through the system. You would stay at that 80% level. Now, this again is the average loan commission value. Sometimes the loan commission value is higher, is up to 7%. That'd be $7,000 loan commission value on that same $100,000 loan. What that means is you make 50 to 80% still. Now you're making between $3,500 and $5,600 on that loan. What if the loan commission value is lower? What if it's only, let's say, 4%? Then it'd be only $4,000 we pay out in total commissions. Well, you're going to get 50 to 80% of that. You're going to make $2,000 to $3,200. So that's where we say you should expect to make 2 to 4% of any loan that you help fund. You're going to make 2 to 4% commissions. But this is how we come up with it. You're making 50 to 80% of the LCV, and the LCV is anywhere between 4 and 7% of the loan amount. So you can just, for simplicity, think 2 to 4% of the loan I get, but know that we use these numbers to figure it out. Now, remember we talked about Century 21, that you could build an agent team of your own? You can refer as many agents as you want. You're not limited by territory. And guess what? They have the same opportunity as you. That means they can build their own agent team. We'll even show you a way to earn on that team. Based on your performance, you can earn on that team. Let me give you an example. Let's say this is you here. You go out and you introduce me. I want to become a loan agent. I know a lot of business owners, and I can help business owners. I know there's a need for what we're doing, why this industry is growing so fast, why our lenders are publicly traded billion-dollar companies, some of them because this is a new industry that's needed. And I go out and I help a client get an $80,000 loan in my first month with a loan commission value of 5%. Well, that would be about $4,000 loan commission value. Again, I get paid on that, don't I? I'm going to make 60% because it's my first month, so I'm going to make $2,400 on that $80,000 loan month one. I'm pretty excited. I got paid that already. You, because you introduced me, remember, you earn on any agent you introduce. What you earn is 10 to 25% of the loan commission value. So of that $4,000 loan commission value, you're going to earn 10 to 25% of it. 10 is the lowest. So let's say you're at the lowest. You're going to earn $400 on the loan that I help secure. Do you see why that broker in that real estate office can do very well? If they're earning off every home sold in their office, well, do you see how you could build a team of agents? And as you're helping them get loans, and you can meet them at Starbucks and talk to them and have weekly goal setting calls and do all kinds of leadership type things to support them, you can help them be successful. Now it says you earn 10 to 25%. How do we come up with that? Well, you earn 10% on any person you initially enroll. That's called your level 1 enroller level. But once you've funded one loan, now you still earn 10% on anyone you've initially enrolled. But now if they enroll any agents, you even earn on them the same amount. So now there's two of you supporting that new agent. You and the person you enrolled are helping the people they enrolled, right? And you both benefit. So now you've got a good team developing here. When you funded 3 loans, this is total. This is not in a month. 3 loans total. Now you get 15% on anyone you've personally enrolled and 10%. Again, this is of the LCV. When you've done 6 loans and 15 loans, you even earn more. You can get 25% on the people you've personally enrolled into David Allen Capital as agents, and now you get through 4 layers of a team. Okay, so this can become quite significant over time. And just to give a quick example, you only have to get 1 customer a month. Once you've gotten these 15 clients, you only have to help 1 customer every 6 months. I'm sorry, not month. 1 customer every 6 months to remain qualified on all these levels and at that 25% level. If you didn't, you'd fall back down to whatever level you're at. Okay? So that's all you got to do is maintain it, and guess what? Renewals count. That means if one of your 15 clients renews in the next 6 months, you're qualified for another 6 months, etc., etc., etc. So staying active is not going to be an issue. We just didn't want people to get involved and then run away, stop working, whatever, not support their team, yet expect to get paid on it. So staying active helps to increase more revenue on your team and also to get paid on that. But real quick example, let's say you introduce 4 agents, all right? Those 4 agents may or may not be productive, may or may not ever introduce a loan client, right? But let's just, for this example, mathematical demonstration, let's say they introduce 4 agents themselves. That'd be 16 agents on your second level. Let's say this continued through 2 other levels, and they all went out and got a loan. You've got over 300 agents in your team. Is this possible? Of course. It's not probable, but it's possible. We've already got people who've done this. And now let's say each one of these 300 plus agent goes out and gets just 1 loan a month. And that 1 loan a month is an $80,000 loan with 5% loan commission value, which is our average loan size and our average loan commission value. So there's $4,000 in loan commission value each one of these agents produced. Are they going to do that? No, of course not. Is it going to grow this perfect? No, of course not. You could have more than 4 agents you've introduced. They may not introduce any, but you can see how this could happen. If all of them had 1 loan, you as that team leader, because you're qualified at that 15 customer mark in the upper right-hand corner, and you're getting paid on all 4 levels of your team, and you're getting 25% on any people you've personally enlisted, you're making over $80,000 that month. That's what you'd make that month, over $80,000. If they all got 1 loan next month, same thing. You see how real estate brokers can do so well when they have a team of good agents who are moving homes? Well, you see how our team leaders can do well if they have a team of loan agents moving some loans? But even if only 1 out of 10 agent went out and got a loan, you failed that by 90%. It's still over $8,000 a month brought in by having 1 out of 10 or only 30 loans a month coming in your entire team. This is not counting your personal commissions, of course. Be $8,000. Now, again, this is a results-based pay plan. In other words, we have incentives to help you to get between 50 and 80% and your team. We have incentives for you and your team to get at least 15 clients so that you make that 25% on people you've enrolled instead of 10 and get through 4 levels of a team instead of just 1. And don't forget, renewals become additional money each time they renew. These are short-term loans, so they could be renewing 5 or 6 months after they got a loan, right? But keep in mind, if no clients are funded, no income is earned. Now, we've got all the training you need. Simple system. We've made this very simple. Our website does most of the work. It's very easy for you to learn and get up to speed. We've got tools that you can use and share. We've got video trainings. We've got a resource center that you can go into. We've got a weekly live call. We've got your team leadership that's helping you. We'll support you. We don't want you to not know what you're doing. We want you to feel very comfortable what you're doing, and that's where the training comes in. So what now? Well, there's no investment required to become an agent with us. You don't have to invest in supplies or anything. You will have to invest in your business cards as an independent agent, but other than that, there's no investment at all. Okay, you join at davidallencapital.com. There's a little partner with us button in the bottom right-hand corner. You click on that, and you sign up. And when you sign up, you'll have to list the ID number of the person who referred you. so that they can get credit and they are now your team leader who's going to work with you, etc., etc. And when you introduce people who become agents, should you choose to do that, they would enter your agent ID there so you get credit. All right. Then go through the basic training. It's a 1 hour long video. Go through that as often as you need till you fully get it all. It's very simple. It's only an hour long. That's how simple it is. And that'll come in your welcome letter, and it'll also be in our Agent Resource Center. Do a game plan with your team leader. It may not be the person who introduced you. They may be brand new themselves. But find out who your team leader is. Do a private game plan with them on how to have success with this. Set some goals and make some things happen. All right? And then go get out and help some business owners you know. A lot of business owners you know right now are struggling, and you don't even know they're struggling because they put a smile on. The sign outside their door still looks great. Their restaurant's always clean, or their salon is always clean, or their massage parlor is always clean, or their whatever the business is, their landscape crew, they always have clean shirts on and the equipment's clean. They look good, but they may be struggling. Help them. A lot of the business owners we're giving loans to are doctors right now. This new healthcare act is delayed at when they get paid, and now they still have to overcome bills that don't wait for the insurance companies to pay. So we give them loans to help them through that time. So you've got doctors who need our help. All right, you need to tell them. And then get out. If you want to build and support an agent team, we recommend you build and support an agent team. All right, it can obviously turn into some significant effort. So we've discussed who we are. We've discussed our industry and that it's booming. We've discussed our loans and why they make sense. We've even shared some of the terms of the loans so you get an understanding. Our compensation, you're going to earn 2 to 4% of any loans you acquire, but it's based on your production. Your performance can bump you up that ladder. If you decide to build an agent team, you can get paid very well on that. But you also understand if no loans are moved, you make no money. There's no risk to become an agent, but we don't want you to sign up just to sign up. Make a decision if you want to proceed with us, and if so, let's run together. We've got a great team, and we're looking to add to that team. And if it's not for you, we completely understand that as well. I just want to thank you for taking the time to watch, and we're looking forward to having you part of our winning team. Thanks for watching.